welcome to a super special episode of Breaking Banks Europe. My name is Matteo Rizzi. I am accidentally the executive producer of the show, but I'm also, together with Lázaro Campos, that you see probably waving right now, the co-founder of FTS Group. This year, we cannot do FinTech Stage in person, which is why we decided to marry FTS Group, FinTech Stage, and Breaking Banks Europe by bringing to you in an amazing 1 hour, super improvised, but very well prepared episode, the best of FinTech in the world. And I will let Dara, our splendid master of the day, to introduce each and every one of them. Hey, Dara, welcome to your show.
Hi, Matteo. Thank you. So, by the way, I think from now on, I'm going to ask everyone to introduce me as a splendid master before I start. Any
Knock
show.
Yourself out.
And then I'm going to ask everyone to refer to me as the FinTech Hall of Famer.
Oh, there we go.
We're getting there.
I'm going to ask everybody. I'm going to ask everybody to refer to me as Jim.
and Lázaro will do fine for me. Thank you.
Perfect. Well, since everyone has decided to,
friend of Lázaro is good enough to me.
Since everyone has decided to introduce themselves, we have FinTech Hall of Famer, recently named FinTech Hall of Famer, Brett Kings and Jim Marous, who needs no introduction, Lázaro, who I've meeting for the first time. But we're here today to talk about really reflections for the industry since COVID and what the post-COVID implications are for FinTech and for financial services. There are so many different areas that we could probably dive into that would take way more than an hour. So I'm going to try to focus on a few areas, but obviously the very smart group of people who we have here, we're a chatty bunch. So just, full disclosure, we're a chatty bunch. So I'm going to try to keep things organized, but we may go off, but I can promise you that it'll be entertaining no matter what. So as we sit here and reflect on what COVID has meant for the financial services industry, for FinTech, and really for consumers and B2B businesses alike, there are a few different themes that I think keep popping up. Obviously, first and foremost, we've got sort of, I think, what we would call the digital leapfrog on content delivery. Leadership in banking and financial services has become front and center, and all of the new talent and new skill sets that have been emerging given the rise in different needs. So, Brett, I want to turn it over to you first. A few of your thoughts on, I guess we'll call it the digital leapfrog that's happening, and that's really been coming front and center since March.
When you look historically at other examples of the type of disruption the COVID pandemic has had on the world, there are some precedents, using a legal term, Dara, to look at.
Keep doing it.
Okay. But, when we come off the back of the Spanish flu, we come off the back of the plague, you do see some pretty significant shifts where behaviors tend to shift on a level setting basis. So they become more permanent. So even just looking at the .com, when the .com bubble burst, we had this call for real-time revenue and so forth. But, the companies that survived that process are still here today. The GAFAs, the FANGs, the BATXs, through that process. But in this instance, we're really seeing a bifurcation of the market on digital and not digital. So in the United States market in particular, you see, the two ends of the market. The challenger banks have done very well out of this, but so have the incumbents that have, been on a multi-year digital transformation journey. The losers are the community banks and credit unions who, have thought they had more time and still have been predominantly about acquiring customers in branch, as an example. But 2019, 66% of all new bank accounts opened in 2019 were done digitally. So, the benchmark was already there pre-COVID. COVID just put more accentuated pressure on. But the one point I'll sort of leave you guys with to keep the conversation flowing is the other area where I see challenges have really differentiated the pure plays. is on engagement. They have a communication strategy, social media, email, in-app notifications, etc., where they're engaging with their audience every day on little things, whether it's a note on how to save more money or stretch your budget or where to find new sources of income. They're using every opportunity to have a relationship digitally with their customers, whereas even the big incumbents, have seen email just as a next best offer or a transactional confirmation platform. And so that's where the gap is in an experience side that I've seen really develop during COVID.
All right. So Brett talked a little bit about what the U.S. market is sort of displaying in that division. What about what's going on over in Europe? Lázaro, let's start with you.
Yeah. So much like Brett has said, I think we have seen an acceleration of digitization of businesses. Those who already had a digital footprint have benefited from well, if you can use those words around a pandemic. And we have seen those that have really in a matter of months have developed their own digital persona. So I think that has been a positive in terms of the acceleration of some of those programs, positive in terms of the benefit that those who had done their homework have been able to derive because they were ready. The move to the cashless society has been accelerated by this pandemic, and the use of cash in Europe and elsewhere in the world has actually plummeted in a way that we have never seen before. But of course, the slowdown of the economy in most of the traditional economy has also had significant implications in, for example, payments. We'll talk about it later, I believe. In payments, we have seen a huge reduction in revenue initially in the first 6 months of this year. Upwards of 20% of global revenue on payments has disappeared. And now we are seeing that trend reversing, but 2020 will be a very different year than 2019 in terms of many of the traditional banking products that are directly linked to the economy. At the same time, we have seen governments pouring money into the economy through directly to individuals in terms of social programs, or more importantly, supporting SMEs through a myriad of programs that are there to not mask, but at least limit the impact of the economy. But the worst is yet to come. I don't think we've just patched the economy, allowed people to more or less survive. But I think the big impact of the pandemic in the economy is something that we are yet to see.
No, I definitely agree.
The second shoe is going to be several sizes bigger than the first shoe.
Yeah, I think, combining both the thoughts of Brett and Lázaro, I think it's important to realize that it's not about just being digital anymore. That was there before, but there's a lot of catching up to do. We found in our research for the Digital Banking Report, for instance, that when we asked organizations, were they a leader, a fast follower, a mainstream player, or a laggard, that actually their rating of themselves as digital transformation leaders went down. So what happens, what that means is the consumer's expectations went up so much that organizations realized that as much as they did, and there's a lot that's been done in 2020, they still ended up further behind than they were before the year started. And that's going to continue because it's no longer a matter of saying, can I move transactions from physical to digital? Can I move from cash to cashless? No, it's what's that experience going to feel like? And where's that bar going to be set? And the bar is set on simplicity and speed, more than anything else, simplicity and speed across all industries. But, to Lázaro's point too, we're going to be at a time where we're not only trying very quickly to catch up, but we're going to have the drag of not only people having missed payments, but certainly globally, are we going to be able to keep that flow of funds going in the U.S.? It all goes away end of December. And right now the politics say there's no reason to save that at the end of the year. So you're going to have a lot of people that could be foreclosed upon or evicted from rental properties. In addition, small businesses who had been kept alive and their employees alive through these funding mechanisms are also closing. We're already seeing major restaurants, major retailers that had been doing very well pre-pandemic, just saying, I can't take the strain myself. Now, they may come back, but it's going to take a long time. But we are not going to go back to what was normal. And any organization that is waiting for the stopping point, where's the resting point going to be, is fooling themselves. Because I think more than anything, we've learned that change is sped up faster than it ever had before. It won't run this slowly again. And playing catch up is going to be harder and harder if you're waiting for something to happen. So strategic planning efforts, number one, you can't redo what you did in the past. So you can't do what banks used to do, it to saying, I'll update what my global plan was. It's got to start over. Plus, they've got to look at it every month and say, are we still on track for what has to be done? So you're going to have this cost-benefit mechanism. And as Brett would say, and we're sitting here with an amazing infrastructure that traditional banks are going to have to cover compared to their digital counterparts. And that's part of the experience. Because if you're trying to save money, it's hard to invest in experience unless you partner with Google.
The wallet wars have started, Jim.
Oh, yeah.
Matteo.
Well, on that point real quickly, Brett, last week, somebody, I guess it was Ron Shevlin, our friend, wrote about the experience of Apple Pay, the new Apple Pay card, and how they put a new platform out. I said, I've not applied for it. Let me see what this is. It is by far the easiest process in any industry I've ever seen. Number one, you go, I want the card. It pre-fills all your name, address, and everything. You go, yes, it's right. Yes, it's right. It asks for the last 4 digits of your social security number, which means 4 taps. It asks for my annual income, which is another 4 taps. And then it then finally comes back and says, do you accept the rules and regulations? Yes. All of a sudden, I'm approved, but not only approved, it is already on my mobile device as the top card. We always talk in banking about, I want top of wallet. They're going to keep that top of wallet position, and then they come back and go, do you want the physical card? Well, obviously, I said yes. It came 3 days later by FedEx, and what was interesting, in the carrier, which is right here, you take your phone to the bottom of the carrier, you point it, and it automatically authorizes you, as opposed to calling up, putting in numbers. The entire experience took about a minute, and it was stunning how simplified a process can get when you're using data and analytics to drive experience.
On a bright side, Jim, now you know what to make sign to the was the next time you cross him, right? So now you have something significant, to get an autograph from the was.
There you go. Exactly. Exactly.
I wanted to point out, something that Lázaro and I are sitting on the same side of the ocean right now, and when he says that the worst is yet to come. Even if you take the point of view of the investors are almost right now sort of picking up on this euphoria or all this money that has been poured by the government. So anything that is digital B2B now not only gets funding, but paradoxically speaking, gets customers as well. So, but very soon there will be a moment where both will be lacking. One, because there is not money anymore. 2, because the public money will actually, end. And that's where only solid businesses will survive, or very large scale-ups like the Revolut of this world that got enough funding before COVID for a few months runaway until hopefully post-vaccine. But that's an interesting dynamics even in the investment or VC point of view.
I'll pick up on where Lázaro talked about, the economic impacts of COVID are going to extend out maybe potentially 2 to 3 years, maybe longer, in terms of the impact. We've got to think sort of Great Depression style economic effects here. But more significantly than that, the pandemic, COVID pandemic is not going to be the last pandemic we have over the next 30 years. With global warming and climate change, the likelihood of primordial viruses being released from the glacial melt is fairly high. Scientists have warned us about that. But we've got two other major events coming over the next 10 to 20 years. First is the impact of artificial intelligence on employment, which is going to have a very similar effect to COVID in terms of people's working practices. And secondly, obviously, climate shift and its impact with coastal sea rise and so forth. So, I want to make even a bigger statement than Lázaro here, and I'd love to hear you guys talk about, get into this with me. But I think what this is essentially shown is the lack of levers that capitalism has to deal with this sort of scale of disruption to the economy. Capitalism is not incentivized to look at these big social problems and provide safety nets and so forth. It's why we had to scramble for these stimulus payments and so forth during the crisis, because we didn't really have a structure in place. Now, proponents of capitalism will say, well, capitalism worked because it gave those stimulus packages out. But, you've got 21 million people in the United States facing eviction potentially. We've had one stimulus check in the United States. A lot of dead people got the stimulus checks, but a lot of people still living haven't, and so there's been real shortfalls in the US, primarily because the US is sort of stuck on this sort of socialism issue that these stimulus payments sort of fall into that sort of mental map category. But when you look at the potential impact of artificial intelligence and climate change throwing into the mix, we have to have a more permanent solution to economic distress that could be brought about by these crises. And right now, that's policy issues that we really haven't resolved during COVID. So the fallout from this, I agree with Lázaro entirely. There's going to be a lot of navel gazing, and there's going to be a lot of sort of future-proofing of humanity, so that these sorts of crises that come in the future don't make the wheels fall off like they have during COVID. We need some sort of strategy for this on a longer-term basis. That's the big picture futurist look at it.
So, Brett, I definitely think those are all very apt and insightful observations globally. The practical lawyer that I am, I think there's also sort of a different observation that I have in that, while I agree with, Lázaro saying it's almost terrible to talk about, to use the term benefit for anybody, in the middle of such a terrible crisis. But the truth of the matter is that, as consumers and B2B companies have shifted their focus, FinTech has been experiencing an increased demand for services. There has been progress and exponentially so in certain sectors. Certain talent is being tapped. Jim was talking about experience. So those skill sets in design and UI and UX and people who are, the best of the best in, developing AI algorithms. Those people, for better or for worse, are doing well. Now, what I think is going to happen is, with as much progress at the speed that it's happened, during the pandemic and moving forward, there will come a time when, based on what I do, the government and the regulators being like, wait, we haven't really taken a good look at these products and services and how they're impacting everyone. And then regulators are going to do what regulators do. So whether or not all of these products and services are doing their job and making consumers happy in the moment does not mean that they are somehow immune from some sort of regulatory and legal scrutiny. And none of that has happened yet. In the United States, that's a combination of a lot of things. One, there just hasn't been any time. And two, a Trump administration just hasn't given a crap. Like, I'm just going to go ahead and say that. That is going to change after January 20th, at least in the US. And I think for those organizations that have been moving at lightning speed forward, they definitely need to, take a beat at some point and make sure that they've got their back end really buttoned up, because there will come a time when the regulator is going to be like, okay, the population that you're trying to serve is not only economically frustrated right now, they are literally the most vulnerable customers in the world, on the planet. So we have to make sure that we're doing this right. And I don't know that everyone always takes the time to double and triple check that.
Look at Ant Group. Look at Ant in China.
Yeah.
Well, you look at what you said on both sides of the spectrum. Buy now, pay later lenders.
Yep.
Kind of were better than payday lenders, but all of a sudden you're seeing that maybe they're no different than payday lenders, just a different way of capturing income. On the other spectrum, it's easy for the Robinhoods, the Betterments, and all those investment companies to do well when the market's going up. But we've never seen all the people that have democratized the investment world, and many of those people are not astute enough, and that's not a derogatory term, to know what they've gotten into, because all it's done is gone up. We're not talking about Bitcoin here. We're not talking about something that feels like a speculative investment. It seems like, well, why aren't you just putting your money all into Betterment, Robinhood, and all the other investment categories and taking it out as a checking account? So, you're going back to the reg tech area, and you're really looking and saying, how in the world do we recapture what's going on here? How do we regulate it? How do we know the small business lenders that have had challenges? How do we know how stable these companies are when there's only been a single direction on the marketplace? And, this is global, and at a time when, because of the things that Brett and Lázaro brought up, that we could have a third of the economy being completely broke and another third being close to being outplaced because they aren't digitally astute. I look back and go, who would have thought, looking back on March, that we'd be where we are today still? And those people that have not taken that opportunity during the time to reconfigure, to pivot, to relearn, to educate themselves, to embrace lifelong learning, because that's going to be necessary. Otherwise, we're going to have a complete set of what I'll call middle market managers that are going to go the same way as farmers and manufacturing people did and be out of a job, because they will not be ready for the economy that's coming up, which is completely different than the economy that left. And I'll leave with one more comment. You look at an organization like McDonald's, these fast food companies. They were waiting to see how could they go to the digital realm of what they did without employees, where actually service would be improved, satisfaction would be improved, everything would be improved. Well, COVID was that case. So you're taking out jobs out of the economy that will not come back, because that horse is out of the barn, where the entire mechanism is all being digitized. I mean, we're seeing it already in fast foods. You can't go into the stores. They're going to pre-prepare with a digital method. And by the way, since you're not going to see the employees, there's no need for the employees. Everything can be done digitally. So I think we have to look at what the dynamics from the economy and from a regulatory environment are going to bring.
I'd like to react to some of the points that I think there's a thread here that we are all picking up. This is the beginning of a very different world, right? This is the first of many. The first of many. And this is putting stress in all systems. Regulation, now we know that the more innovative we are, the more stress we put in our regulatory environment, and the less capable our regulators are to react quickly and effectively, and they do it. So we are putting pressure in all the systems that our society is based on. We're going to see a significant focus on individual resilience. When you don't know what the future holds, and much of the basis of the fundamentals of your life are shaken in one go so quickly, and you end up wearing a mask and not being able to go see your grandmother. These are significant. This is not just a new, are you digitally enabled or what? This is a fundamental shift. So we all retract And now I cannot count on anybody. I need to be resilient myself. At the same time, governments need to become more social because they are the only ones that have the size and the scale to help all of us go through these. So we are going to see, which sounds opposite forces, but they are reinforcing each other. Individual resilience and the new social government are going to be that those two moves are going to significantly change how we save, how we invest, what services we expect, how much we or how much governments are going to be supporting the economy and how they support the economy. So this is a landslide. This is a significant, and I think reflecting on those, I'd like some reaction to those two trends, whether you agree or disagree, because I think those are fundamental levers that are going to drive the future of service provision and also drive the way in which people see themselves in that digital economy.
I know we've got to wrap up for the break, Matteo, but I will say, Lázaro, that social consciousness that you're talking about, both the sense of community that we have as individuals and how we contribute, but how that feedback loop works at a sort of a community level where the government can get involved. That's when I talked about the shortfall in capitalism and its ability to provide a safety social net. I'm really talking about the fact that capitalism lacks that social consciousness. It's got a market consciousness right now, right? But it doesn't look at the impact of profits on the broader social issues. And I think that's really what you're talking about. COVID sort of really draws that to the fore.
Indeed, Brett. And actually, your intervention is not actually is an even better segue to the way I wanted to wrap up this first part. There is a guy that was able to sort of leave me stuck in front of a PowerPoint presentation for 2.5 hours. And it's been 20 years, not even you, Jim, or you, Brett, were able to do so. And his name is Jean-Marc Jancovici, and is one of the renowned researchers. He has a CEO of a company called Carbon 4, and is one of the visionaries and sort of the paladin on how financial services could actually stop thinking on quarters and start thinking on decades, and the way...
Amen,
which,
brother.
Making this exactly, and the way in which looking at the sustainability of the planet is a much smarter way than simply looking at the economy at the short term. So and this has to do with how the fundamentals that are going to change, and it is a good also sort of resume of certain points that you, Brett, touched upon, like the fact that because we are not doing good with the planet, we are simply accelerating this phenomena that are going to fundamentally change it. And it's like a vicious circle that we need to transform in a virtuous one. So this and more, we are going to keep talking about in the second part of the show. And I also wanted to add that tomorrow, December 1st, we're going to spend another half a day together with Deloitte and more amazing speakers, including, Lázaro, remember our friend Peter Hinsen, brought back from the very beginning of InnoTribe.
There's a blast from the past, yeah.
Exactly. Another super visionary man and a good friend of the family, talking again about leadership and fintech as an opportunity for a faster recovery. So stay with us for the second half of the show. Thank you. Deloitte Italy and the FTS Group are proud to invite you to the 5th edition of the FinTech Talks, this year in a digital format. Join the conversation about how to powerfully recover from this great reset, talking about leadership, investments, and innovation. Go to ftsgroup.eu and sign up to this free session.
All right, welcome back, everyone, to our second half. I wanted to pick up really quickly on some observations that both Lázaro, and Brett and Matteo were making at the end. And then we can, move on to some more, nuts and bolts topics. But the issue is an important one. We have a situation, and these very significant macroeconomic effects. And, we don't have complete crystal balls, but we can see enough into the future to see, what could potentially, be happening with citizens around the globe for a very long time. So when you try to balance the need for individual resiliency, as Lázaro aptly pointed out, as well as the need for government to be more socially focused and then really be a safety net, and because they do have the size and infrastructure in order to actually, help their constituents, I was sitting here thinking that it's, in my mind, a little bit of a double-edged sword, because if individuals do not have the resiliency and sustained resiliency, and they, succumb to very natural, fears and, reflecting negatively on the situation that they're in, we want democracies in our world. And these are the same individuals who are going to be electing, lawmakers who are then going to be tasked with delivering all of the social benefits to the world. So how do we reconcile those two things? How do we prevent what we saw happening around the world, particularly, the United States is a great example. Yeah. The United States is a great example of people allowing sort of fear and hate and, maybe some irrational motivations for the lawmakers they elect. And there's been just constant and vocal conflict in that, and where do we go from there?
So can I jump in on that, and then I'm sure Lázaro will have some comments as well at a macro level. But my view is that what we saw with Trump, Bolsonaro, Le Pen, Boris Johnson, the populist movement. The concerns and the fears that stimulated those guys into power were the same that also created support for Bernie Sanders, Elizabeth Warren, and AOC as an example. It was the underlying economic uncertainty that came with this. To really emphasize this point, as part of my research of the new book that I'm doing, Rise of Techno-Socialism, I found that since 1995, protests have increased 1,000% in frequency and size globally since the mid-90s. Now, this is not a function of population increase. This is a function largely of inequality that's happening on a global basis. So when you look at COVID, COVID has accelerated the harsher impacts of inequality. And so when you talk about sort of having policy around this, and when Lázaro talks about the need for governments to have policy and regulators to adapt to this, we're really talking about the fact that inequality is a massive problem globally, and that events like COVID are accentuating, the effects on the richest versus poorest. When you look in the UK and the US, the effects of COVID hit the poorer, lower to middle income households far more significantly than it did, the 1%, as we might call them. So, at the heart of these sort of movements that we've seen politically is this very real concern, economic uncertainty. The world's changing faster than it ever has before, and the number one impact of that is the way I work and the way I can generate an income and put a roof over my head and look after my family. And the call to sort of go back to the 1960s and the way life was is a call to create some certainty, some stability in the system, like, our perception of the world when it moves slower. And so that's really at the heart of, I think these political movements, the protests that we're seeing globally. I think it's this core economic uncertainty. AI and climate change are going to do nothing to create more stability. In fact, they're going to create greater economic uncertainty, which leads to the ultimate conclusion, I'm going to throw it out there, is that universal basic income is absolutely a necessity for social stability.
Okay,
wow.
so I have a real quick question.
There you go.
Such a small conclusion.
Questions,
right?
anybody?
Like we just,
Brett,
little thing Brett just threw in there.
You gave us a global impact, but I think we have to bring it back home and say, okay, So how does the banking industry play into this, contribute, or are they going to be going the opposite direction and contribute to the failure? I mean, it's great to say this is going to happen politically, but really, when we're talking about the banking industry, what is there going to be their role as it relates to inequity, equity, inclusion?
We've already, Jim, I think with the banking industry, it's totally connected to everything, as they should. And we already see that, right? So, and it's not only the inequality, it's also the economic state of the world. Now, there used to be a time, I remember it, where you having money in the bank actually gave you money, right? You would receive interest, right? Wonderful world. The savings actually meant something. We're moving to a world in which keeping money in the bank is going to cost you money. In some countries is already the case. And we've moved in the banking world in Europe, it was all based around the float, around that pool of money that banks were actually playing with. And that included everybody's money. But that is when money was worth something. So in other areas of the world, the US is a prime example, banking has never been that way. It's been more transactional. So you pay fees for specific transactions. The pool of money, that was not the business model, right? So we've seen a shift of banking towards a transactional model where you pay to hold an account, you pay to have a balance, and you pay for everything that you're asking the bank to do. So I think we've already seen that shift where the banks are trying to change the business model to a place in which whatever happens, they will get their fee, right? They are not trying to predict what the future looks like. They are just getting paid for doing effort. Effort gets revenue, right? Now, linking it to some of what Brett was saying, inequality. Well, 40%, upwards of 40% of Americans cannot sustain an emergency purchase of more than $400. That means that they don't have $400 in the bank waiting for an emergency. If that is not the best example of inequality, when 10% of the population hog 95% of the wealth. So, and America is not the only place. You see that more and more. Possibly there is the more extreme example, but there are many more examples. China is even more extreme. Europe is somewhere in between. But we see that concept of inequality is what drives the conspiracy theories, the populism that we've seen with Brexit, that we see with the Trump administration, with the Brazilian Bolsonaro. So those examples that Brett was referring to, there is a cause and effect, a direct relationship in between populism and inequality. And actually, it's difficult to say which one precedes the other. They feed each other, right? And for that, I think the pandemic and others, they are creating the perfect conditions for that populist message to continue. And it's not because you've changed the presidency or you've changed the party that is in. Those things are not going to go away. Those things are not going to go away. They're going to get worse. Because when presented with uncertainty, everything, the past was always better. Inequality is rising. And that is more important, at least in Europe, we have a huge issue with the unemployment of the youth. There's a huge number of students coming out of university with nowhere to go. And that then creates another problem, which is we were brought in a world in which you were going to be, chances were more than 90% chances that you were going to do better than your father and your mother. There was a flow, a natural flow of how the evolution would actually benefit individual households, and economic development would translate in better conditions and better living conditions. That is no longer true.
Yeah, this is why we've lost, the great American dream has evaporated for that same reason.
And I think that is what really, and the pandemic has only exacerbated that point. This was a trend already. This is not new.
Correct.
Speaking of inequality and disparate impacts of the pandemic, I'm gonna make one comment, and then I'd sort of like to shift the conversation. But what we haven't talked about is sort of the disparate impact of COVID, frankly, on the women of the world, and how much more impactful the COVID-19 pandemic has affected women at every economic level. I think McKinsey released a study over the summer that said, women were 1.8 times more likely to lose their jobs. You're seeing women leave the workforce in droves right now. And that even though we comprised, I think, 40% of the global workforce, we actually accounted for 58% of the job loss during the pandemic. So that's also a massive regressive effect of on all the progress that women have made economically and professionally over the last several decades.
And Dara, it doesn't help that the presence and the penetration of women in the banking and fintech industry is minuscule, because without their representation,
it never got good.
Without their representation, the development of products to serve that market is underdeveloped. So, because if you don't have people that understand the problems, you're not going to get solutions that address those problems. And the reality is, I just had an interview today on Banking Transformed with the founder of FinTech Partners, and we discussed the fact that and Deloitte just came out with a brand new study on it as well. It is amazing how fintech, given a brand new industry, has done no better than the legacy banking industry has done with penetration of women. Now, there's a lot of reasons why that could happen. The biggest challenge, though, is in the developmental stage, that the addressing of those issues are not as likely to be taken care of when women are not in the leadership position, are not in the founder position, are not in the funding position, either on the receiving end or the delivery end. The good news is we have a very big bank that has a female leader right now, but it's beyond the tip of an iceberg. Exactly. So, but we have to think about the impact of this. It's not just the presence of women; it's the developmental capabilities.
So,
by the way, guys, sorry, a quick shout out about two of our last Breaking Impacts show that we have made, where we talked about actually this more in general the diversity perspective, but there were three amazing women talking about their different experiences, both in fintech but also in the tech world in general. So watch out for these shows; they're amazing. Sorry, Dara, you can bring us to the next topic.
Oh no, that's okay. So since we're talking about leadership, I think this is a natural transition to, if you are a CEO right now, given everything that this group just talked about, the economic challenges that are ahead, the political challenges that are ahead, the slew of obstacles that we know are still in front of us, how do you strategically plan to move your organization forward? I'll throw this one up to the group. Whoever wants to jump in.
Maybe you retire and get out of the way. Look, I think it's really hard to do strategic planning in this environment. I think it comes back to some pretty simple guidelines. Is what is your continuity of business plan been during 2020? And if you can't engage customers digitally, that's your starting point. Is make sure every experience that you have within your business, the core utility of your business, is expressed to customers in real time through digital channels.
Quite right. And what we've seen is that this pandemic has really tested those who know what they're doing and whose business model is resilient, and those who don't. And it's come down to what Brett is saying, is that how resilient is your organization? How ready are you to embrace? I mean, some organizations had trouble just working remotely, which sounds so simple, but that was a significant issue, and they are still trying to cope, right? But I think this short-termism that you turn into is really talking about the resilience. You need to make sure that your company and every component of your organization is resilient on its own. So there is a lot of thinking about how the different parts of the organization can operate, and also scenario planning. So since we don't know what the future holds, let's just think of many futures and see how we play in those futures and what lessons people are asking me between March, April, May. So, oh well, you're home. I used to travel a lot, so now you don't do anything. I don't remember being as busy as I was in those weeks where everybody was rethinking. Everybody was going back to the drawing board and trying to distill the essence of what they stood for and the challenges and whether that was sufficient or not. So I think there is a time for introspection. Is what do we stand for, and also much the reactions that I've seen are an emphasis on the social element of what your company provides. So it's not only about sustainability. It is not only about maintaining profits or maintaining revenues. It's what is it that we can do to help our employees, our customers, our communities. So you remember that we used to talk about corporate social responsibility and so on when companies started to have a soul. Now I've seen this now in practice in much more meaningful ways than before. So as a CEO, I think you think about your customers, you think about your employees, you think about resilience of every component of your organization, and you think about giving back. You think about how can we help.
I think COVID and the social unrest is making it so consumers now are recognizing that. We just did a survey on financial marketing and found that selling dropped way down as far as priority. Cross-selling brand and community investment went way up. This came from the consumer side and from the financial institution side. And the more we're in lockdown, the longer the period is that the consumers can recognize what's really going on in their community. I mean, we're all starting to see shuttered doors. And if our financial institutions don't open if we saw a branch close right now, I think there'd be an uproar. On the other hand, if you opened it as a community center for small businesses or anything of this nature, there's going to be a lot greater value now than there was pre-March. Same thing with social elements, racial divides and really stepping up there. Now, it's risky business, but being silent is not an option. And I think what's interesting is the consumer, because of shutdown, is now more aware of how the world's revolving around them because they're in stress. And their financial institution isn't helping to relieve that stress. They're adding to the stress.
I wanted to sort of add something that what Lázaro just said, made me think of. One of the messages that really struck me of this Professor Yankovic is that he was saying that whatever we do, the next 20 years of our both economy and world we already signed up for. So there is not the inertia of the system made in sort that whatever we do, we can't change anything in the next 20 years. So if I am a CEO in my 50s, the horizon we're talking about is that when my nephew will be my age, he will see a radically different world if we don't do anything. That was the message. And that don't do anything could mean fundamental change such as like 1 billion people moving from the equatorial zone up north, typically in Europe. And today it's super expensive to be poor, but shit will hit the fan when people on the top of poor will be hungry. And this is what he was saying. So hungry people revolt.
Yep.
Poor people, you can play with them, right? So and this is, if I was a CEO today, I would invest money and time in try to make my people think at the longer horizon. That is not what typically financial services are, thinking of today. I don't have the answer, but I'm pretty sure that in general, big corporations and financial services as well are not spending enough resources to make this clear. Brad, don't you think so?
Absolutely. In fact, I'll reinforce that, Matteo. I think, and Lázaro, same to your point, and Jim, that if you're, as an FI, if you're not doing something positively to help the financial situation of your customers, if you're just transacting, you're going to suffer as a brand. Look at Google Pay, what they've launched just over the last couple of weeks with the Google Wallet update, with Google Plex. It's a whole set of financial health tools built into sort of real-time purchasing power built on Google Pay Wallet. That is the start of the smart bank account wars that we're going to see moving forward, because as a financial institution, your number one question you have to answer for your customers is, how are you helping them cope with the economic stresses brought about by these changes in the world? And if you're still thinking about you're still thinking in product terms or channel terms, you're going to miss that massive opportunity that is reframing the context of financial services in a post-COVID world.
And also remember, the long-term view is getting longer, because somebody born today has better than a 50% chance of living past the age of 100. So and I'm not saying that whole 100 years is going to be in comfort, but if 20 of those years are in a nursing home, we have bigger issues here. And so the scope of what long-term is certainly extending.
Jim, I was spending 130 for me. I mean,
there we go.
I'm going to retire. I'm going to retire to Mars at about 90. I think that's my plan.
There we go.
On this very light note, guys, thank you very much. It's my turn to take back the word and wrap up. Thank you, Dara, really, for keeping us together. Even if the agenda was very strict, you just did wonder, and because we usually like when the script is pre-cooked for us. So Thank you very much, and that's all irony, 300%. Guys, thank you for being with us, Jim, Lázaro, Brett, Dara. Again, this is like the second show of this kind. I suspect it won't be the last one, but thank you for actually very candidly come to support FTS. And I'm really wrapping up with this true story. Peter Hinson is an amazing, renowned speaker, and I said, listen, this year FTS was hit because, as you can imagine, the conference business was completely disrupted. So we are calling our friends to keep it up, like when you do a concert, to support the cause. So thank you very much to support the FTS cause. This is
rock stars.
Thank you for what you all do. Also, I got to get going, but thank you.
Thanks, Jim.
Thank you. And guys, don't miss tomorrow's second part of FTS with Deloitte. Stay tuned. And it's a wrap. Thank you.